Interesting topic of conversation has to deal with Trump and Mexico. Mike Eppel joins us right now. And I was listening to an interesting report this morning, Mike, that the main reason for Trump going to Mexico and for Mexico inviting him is because the amount of investment dollars leaving Mexico over fears of Trump presidency. And so the president wanted to show how he could deal with Trump. And I think the whole thing kind of backfired on him.
Yeah, well, the other thing, too, is Trump wants to appear more presidential, and Mexico, want to set the stage in case of a Donald Trump presidency, lay the groundwork, because obviously that topic of building a wall, who's going to pay for it, the renegotiation of NAFTA. Something that Donald Trump has also been talking about, because he says the Americans are losing too much in the way of business to Mexico. And you look at how many companies have shifted their dollars, not just from the U.S., but also from Canada to Mexican production. Lower wages, lower cost of production there. So it's all a big political debate. And you know what, Kevin? Over the next couple of months here, heading into the November election, it's going to be even more amplified, let's call it, especially once we get out of past Labor Day. This weekend, next week, we'll really see the start to the finish line, I suppose, the race to the finish for the U.S. presidency. So, again, it is going to be a lot of rhetoric, and it's something the markets are going to pay very close attention to, because you've also got Wall Street policy, banking issues, various trade ramifications for the U.S. Do they crack down on banks? All sorts of talk, which will come front and center for investors. That's why we talk about the start of September as the time for volatility. August was quiet. Let's face it, the markets didn't do very much at all. When all was said and done, the TSX at the end of August was up 0.1%. Wall Street's benchmarks were down about 0.1% each. But once we get into September, historically, it's the most volatile month of the year on the financial markets. We talk about sell-offs in October. September, actually, you look at some of the biggest price swings for stocks, that's when it happens. And it's no surprise. You've got, in this case, the election, but also key commentary coming from central banks. Next week, it's the Bank of Canada and the European Central Bank. And then coming up after that, the U.S. Federal Reserve, the central banker to the world, Janet Yellen. Will she or won't she be raising interest rates next month? That's going to be a key talking point. Now, we've also got market activity this morning already because of some economic results in from China overnight, which was better than expected for factory output. That's a good sign, actually, for the global economy if China's starting to pick things up. We've got a G20 summit coming up in Beijing, so that's going to be actually some positive signals for China to perhaps boast about. On the energy trade this morning, price for oil, interestingly, down below 45 bucks a barrel. Dropped yesterday quite significantly by more than 2% as the U.S. inventory levels for oil came in much higher than expected. Just a lot of oil in the market right now. Canadian dollar down for, I think that's a 7th day for the loonie being lower at 76.25 cents U.S. Earnings due today for a couple of companies, diverse companies, we'll call them, in the retail sector. One at the high end of the price point range being Lululemon Athletica, the Vancouver-based company which trades on Wall Street, not on Bay Street anymore. Bit of a disappointment there. It has had a good year. Lululemon's sort of been in a restructuring phase over the past 12 months. They've increased their sales, they've increased their profitability, and you look at the comparables on Lululemon from an investment standpoint, shares are up 45%. Nike, for example, down this year by 7%, and Under Armour is also lower for the year to date. And Dollarama will also be reporting earnings before the bell this morning, and that is the lower price point for consumers, but from an investment standpoint has been very solid. It's up about 25% year to date. Kevin, back to you.
All right. Thank you very much for that.